Yeah, good morning, everyone. Uh, US market had seen some corrections, more of a profit booking and some concerns about results. We had seen in recent past that the bond yield has moved up very sharply in the US, indicating that the rate cut may not be so fast as was expected earlier. Also, since the elections are getting near in the US, some profit booking is emerging before that. And a lot of results which are coming, that is also having some impact on the prices of these stocks. Futures of the Nasdaq is up substantially, mainly driven by Tesla, which has reported results post market hours, and that's why Tesla was up by almost around 12% post market. So that is supporting the Nasdaq futures. Asian markets are mixed bag, more of towards declining side, where in Hong Kong, Japan, Korea, Taiwan, all these markets are negative, whereas Australia, New Zealand, and Japan are a bit positive. So all these are taking some clue from international US market, and increasing dollar index has also have some impact. Whereas commodity are more of a marginal up or down, wherein oil is stable, flat, whereas aluminum and copper are a bit down. And uh, iron, sorry, aluminum and copper are a bit up by around 0.5%. Iron ore and steel are down by around 1%. So mixed reaction across different market and different commodity, different asset class. So what we had seen that we had seen very sharp corrections earlier, and saw some stability yesterday. So the major sell-off for timing seems over, but we can't rule out normally what happens, like in a settlement where the things are bad, uh, the things turn around post settlement. So quite possible that we may see some more sell-off towards the end of the settlement, but currently seems like we are stabilizing. So quite possible the index can remain bit range bound in today's trade. Now request technical team to take up from here.
Thank you, sir. Good morning, all of you. See, yesterday we saw after sharp sell-off, yesterday managed to flattish closing and Nifty maintained closing about 24,000 450 range. And today we expect a gap up open, but till the day upside, the next immediate resistance place around 24,600 and 24,640 is a majorly resistance for index. If Nifty break this range coming days, 1 to 2 trading session, then we expect further upside move. Otherwise we again see some pressure in upper range, that is 24,640 range. Downside, majorly first immediate support place around for 24,370, and below that 24,200 next major support for index. So today we expect positive open, but first half an hour we closely watch if Nifty maintain the 24,500 range and above range, and then 24,600 range, then we expect further rally. Otherwise, after gap up, if Nifty first half an hour not maintain above the 24,500, then again Nifty trading between 24,400 and 24,370 at downside range. Bank Nifty also trading near the important support zone, and that comes around 51 200 and 51,000 at downside. Bank Nifty upside 51 500 and 51 to 700 is the next immediate resistance. If Bank Nifty break 51 51,200 in closing basis, then we expect further sell off towards 50,700 and 50,300 at downside. So both index trading in crucial level. We closely watch 1 to 2 trading session. If it is sustained or if we break, then we expect further sell off. Nifty, Nifty also trading near the support, and yesterday managed to sustain the 23,750 range. If break this range again, then we expect downside 23,600 and below that 23,440. Upside 23,900 is the first immediate resistance for Nifty. That's it. In index base, we expect a positive open, but we closely watch first half an hour if sustained. Stock specific, in positive side, JMDC Limited looks positive. We saw yesterday volume breakout with price, and we expect this momentum to be continued towards 378 and then 319 upside. Downside 345, 50, 340 the major support for GMDC. Navin Fluoro also looks positive. We already given a call in Navin Fluoro. So we expect this positive momentum to be continue. Negative side, Pidilite industry looks weak, trading below the 50 DMA. We expect this pressure to be continued towards 200 DMA. That comes around 2990 at downside. Upside 3140 is the first immediate resistance for Pidilite. Dr. Reddy also break important support yesterday, that is 6610, and close below this important support. We expect Dr. Reddy in negative side. All momentum indicators showing a negative crossover. We expect some pressure in Dr. Reddy towards 6400 and 6370 at downside. Upside 67, 20 and 40 immediate resistance for Dr. Reddy. The Dr. Reddy looks weak at current level. That's it for technical. Derivative I can carry.
Yeah, thank you, Vikas. On the derivative front, looking at the overall position, still status quo, where small support is at around 24,500 odd levels. We have just closed below the same on the futures, but there is still the PCR is still above 1 at the strike, and the overall PCR is in the oversold zone. So that does suggest some amount of bounce back can come in. Yesterday we saw the selling tapering off, which was a good sign. VIX also hasn't gone above the 15 levels on a closing basis, which is a good sign. Still around that 14 and a half levels. No doubt FIs have been sellers, and that is why a lot of selling pressure has gone in. But we expect a bounce back from current levels, at least up till the 24,700, 24,750 odd levels. Highest call base is around that 25,000 levels, and for puts, it is at 24,000 levels. So at this point of time, some amount of bounce back can come in. The support for Nifty, immediate support is placed around 24,350. From the stock specific front, we expect most of the sectors to witness some buying, but banking, again, in the last fall, it hasn't seen huge amount of selling pressure. While other sectors have seen a lot of selling, most of the banks continue to remain stable. We expect some buying to emerge in the banking space, and banks like HDFC Bank, Axis, Kotak, these banks can do well going forward. So yeah, that's it from my side. Like to ask the fundamental team to take over, please.
Thank you. Good morning. On the result front, Hindustan Unilever Limited posted the results in line with expectations. In terms of top line performance, it posted ahead of expectation numbers and reported 2% revenue growth on a YY basis. However, volumes came at 3% versus the expectation of 5%. Gross margin was lower, which was down 170 basis points. EBITDA margin reported at 23.8%. The management expects demand to be stable in the near term and with the margins at similar levels. It is expected to take price hike in tea and skin cleansing products with a calibrated approach, which is expected to drive growth with better realizations. Currently, the stock is trading at a PE of 51 times to FY26 EPS, and we are neutral on this stock at this valuation. Pidilite Industries Limited posted the results in line with expectations. Volume reported at 8% versus the expectation of 8.5%, and revenue grew by 5% on a YY basis, where the EBITDA margin reported at 23.8%. The stock is trading at a PE of 64 times to FY26 EPS, and we will provide the update post the con call. Navin Fluorine International Limited posted the results. Result was broadly in line with expectations. Revenue grew by 10% on a YY basis, and operating margins were at 20.7%. In the con call yesterday, the management highlighted key growth drivers. The first, in the HPP segment, there are new plants such as AHF and R32, which are expected to be commissioned by FY25 end. In specialty chemicals, it has a strong order visibility, which will consume its assets of Dahej and Surat and drive the overall volumes. The volume growth is substantial from the Q4 onwards. Also, it has launched 3 new molecules in the quarter. The quarter performance was mainly impacted due to lower demand and the increased competitiveness. And the third growth driver is CDMO, where it has a strong order book position for the second half of FY25. It has received the scale-up order from European and US major clients. And also, the CGMP for phase 1 is expected to be commissioned by Q3 of FY26. Generally, CGMP plants have seen the revenue potential of 2 times of the overall capex. The management expects improvement in performance Q4 onwards on account of firm orders from the customers. We have a positive outlook on the company's future performance, where the stock is currently trading at 35 times PE to FY26 earnings. Yesterday, we also attended the con call of Amber Enterprises. As we discussed on the results, top line has delivered the robust performance due to increased sale of consumer durables and electronics, and margins were largely stable. In the con call, the management is expected to grow ahead of industry growth, where the RAC industry is expected to grow by 30%. And within consumer durables, it has a share of revenue from the RAC and RAC components at 70% of the top line. Electronics is expected to grow by 50% in FY25 with an EBITDA margin of 8%. The management aims to achieve 10% margin in the next 3 years. Order book of Sidwal stands at rupees 20 billion, and management expects the order execution within next 3 years. While we are structurally positive on the stock, we remain neutral in the near term as margin expansion is unlikely in the near term. The stock is currently trading at 58 times to FY26 EPS. SRF had a con call yesterday. It has posted the result below expectations on account of macro challenges. If we understand the segment wise, in chemicals business, specialty chemicals was mainly impacted by slowdown in agrochemical segment. The management expects the segment to grow on account of quick ramp up in the recently commissioned plants and the new product launches. Also, fluorochemicals is expected to see the growth with in advanced stage of discussion of certain grades with customers. In packaging films segment, it has seen the better performance of BOPET and BOPP. The stock is currently trading at 31 times to FY26 EPS. We are positive on the company where the management is guiding for better volumes in Q3 and further better from Q4 onwards. Thank you.
Good morning. KPIT Technologies reported its numbers in line with expectations, both for revenues and EBIT margins. Companies seeing opportunities in US and Asia markets, while Europe OEMs are struggling. In terms of guidance, company is set to meet its lower end of guided guidance of 18 to 22%, while it says profitability would be higher due to increase in offshoring of client business due to focus on cost optimization. Q3 may not be a strong quarter for the company, though the pipeline seems strong, it says. Company is raising funds of around uh, 2,800 odd crore through QIP, wherein we will see a dilution of around 6%. These funds will be utilized for acquisitions in future. Stock is available at 47 times FY26 expected earnings, and we believe in near term it can see some pressure. After consolidation, one can accumulate the stock for long term returns. Secondly, Birlasoft reported numbers below expectations. While revenues were in line, EBIT margins saw a sharp decline of almost 260 bips quarter on quarter due to higher employee and subcontracting expenses. New TCV deals were also lower at $89 million against 94 in the last quarter and 167 million a year ago. Demand environment for the company remains unchanged with delays in decision making seen. Company expects an uptick in TCV during Q3 and Q4 quarter. Stock is available at 20 times FY26 expected earnings and can see pressure in the near term. Thank you.
Good morning. On the result front, TVS Motor Company posted the result marginally below expectations. Revenue from operations grew by 13% year on year. EBITDA grew by 20% year on year. EBITDA margin came at 11.7% versus expectations of 11.9%, and the PAT is below expectation. We have also attended TVS Motor Company Concall. So company's rural market picking up the demand. It has beaten urban market in terms of growth rate for the first half with 9% and urban being 7%. Company expects the market to continue further as well. The company stated that during the Navratra 9 days, industry grew by almost 10 to 11%. But now there is a slowdown. Now the growth is 4% in the industry. They expect improvement in the coming week due to Dhanteras. Challenges in the Red Sea continue. Currency devaluation and inflation in certain African markets present risk, and European market is also not doing well. And for the Q3, the company expect the industry to grow at 7 to 8% and anticipates outperforming the industry. So the overall outlook for TVS Motor is neutral. Thank you.
Yeah, that's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. Yesterday, we had witnessed correction in gold and silver, and there should be a pullback today. So one can initiate a buy in gold around 77,800 to 750 levels. Again, on upside, there should be some resistance around 78,200 to 250. So profit taking around these levels is recommended. And one can also initiate a sell around 78,250 with a strict stop loss of 78,500. Again, on downside, the support area at 77,800 to 700 should be sustaining. If prices are closing below 77,700, then we might see further correction. And in silver, there should be a pullback till 98,000 whereby some selling pressure could be witnessed. So strictly sell with a stop loss of 98,800, and downside again 97,000, 96,500 is the support area. And in metals, uh, copper, we expect some correction to continue. Prices are expected to test 802 on the downside. So there should be a pullback till 812, around which one can initiate a sell with a stop loss of 818. And zinc, however, is positive. But as long as it is holding on 289 levels, we expect buying momentum to continue. And in crude oil, we are expecting prices to test 6050, 6100 on upside. So buying on dips around 6020, 600 with the stop loss of 5920 is recommended. And in natural gas, there should be some pullback till 205 levels on the upside. So one can buy around 198, 197 with a stop loss of 190. And on upside, again, 208, 2010 is the level where one should expect profit taking. That's it from us. Thank you very much.